Hello traders, welcome to your daily update for Friday the 10th of April 2015, and the session continues where the US dollar extends its gains against all major currencies as the market starts to price in, including the treasury yields, of an interest rate rise somewhere between June and September. My personal opinion is September is the more likely, and it all kicked off and really accelerated after last night's jobless claims helped the currency with 121 claims filed, and that's extending its consecutive string of results under 300k. So we're starting to see very consistent figures under the 300,000 mark, which is a very strong trend, which reinforces the outlook for the US labour market. So we're starting to see the market buy into long dollar bets, and it took a little while for the bond rates to start to price this in, but now it looks like we have everything on board and the US dollar should continue to extend. Now, we did have the IMF warning of a bumpy ride, and it's just a note that I just wanted to quickly mention, where the managing director basically said that economies have overpriced assets, and that's due to a long period of very low interest rates in the US. And it's with good reason that these economies have started to expect and tolerate higher risk investments due to the lower interest rates. And with this, when the Fed starts tightening, liquidity can evaporate quite quickly. And I think that is possible. We're starting to see the market hover in the Dow Jones and everything like that at historical highs, and this is on the back of all the quantitative easing and all the cheap money and low interest rates, and it's really making the conditions as easy as possible for companies to actually make a profit. But those situations can't remain like that forever. So while we've mentioned that the Fed's going to look to raise rates, we have started to see bond markets and currency markets starting to price in the raising of interest rates, and equity markets haven't yet given me any indication that they are poised for any kind of reversal or really fearful of any liquidity drying up or the impact that raising of interest rates could have. So it's just a little note out there that we could see between now and the end of the year quite a volatile market for the US, in my opinion, and we'll have to wait and see how that plays out. But we could be heading for a correction. I know that when you raise rates, debt becomes more expensive, and companies' profits take a hit. Those with debt, of course. All right, let's get on with it. We've got one more piece of data coming out tonight, and that's the import prices for the US. Other than that, there isn't a lot of information. So I think the US dollar is just going to continue on its path and grind a little bit higher. It may actually become somewhat of a subdued night due to the lack of data. However, we do have coming up a little bit of UK data, and I don't think that's actually going to help the currency pair. Now, we've seen the sterling sold off heavily against the US dollar, and that's because they've left their rates on hold. So with the Bank of England this week stating that they're going to leave the rates on hold, and they've had the pressure of very mixed economic data to quite weak data, it's now pointing to the picture that their rates will be left as they are for even longer. So that, I guess, somewhat furthers the gap or the divergence between the US economy raising rates and the UK economy leaving rates on hold. And there's no talk, not even close to any talk of them when they will raise rates. I've always been in the camp they definitely won't raise it this year, so why would they be talking about it? But the market's really starting to price that in, and we're seeing quite big falls. So the sterling could actually fall a little bit further. I don't think the data coming out tonight is going to help the situation and create a bounce in the pound. So that's just one to keep an eye on. Now, regarding the UK data, there isn't a lot coming out there, but something I want to mention that the Euros doesn't have a lot of data coming out, and the Euro versus the US weakness is purely a broad-based fundamental sell-off, and it's one that I've been mentioning where the Euro economy is in a bad state and they're doing quantitative easing and America's looking to raise rates. So yes, they should be their currency pair should be getting further and further apart, or in this particular case, selling of the euro and buying of the US assets. So that's the case, but there's three factors that have been driving the recent move, and that's where eurozones have been moving lower, and some are even in negative territory. We've also seen the US jobless claims improve, and that sparked on the US rally. And reports that the eurozone has now given Greece a 6-day deadline to come up with a revised reform proposal. So with only 6 days to go before they need further bailout funds, that's adding additional risk into the euro market. Now, as far as I'm concerned, there still could be something done. It is a game that goes on back and forth, and we've seen that now for many, many months. But there is a deadline, and it is growing nearer, and there is some tensions going on, and the market is pricing that in. So with a Grexit still somewhat on the table, there is risk there, and the market's pricing that in. Now, we need to really consider what's going to happen moving ahead. And I think that the pair is going to continue to fall, but in terms of a political aspect, I'm still very short the currency pair and looking for shorting opportunities, but I am also very wary and very conscious that at any point there could be news coming out to say that Greece has fulfilled the EU's requirements, and we could get somewhat of a little relief rally. So when you are trading, you just need to bear in mind that that's a possibility and trade accordingly. But overall, I think it's definitely to the downside. Coming up tonight, we do have the Canadian employment report. That's pretty much the focus for me in terms of economic data. And Canada's actually quite interesting. It's coming back into the news, and we're starting to see currencies fall quite heavily against the US dollar, and the Canadian is one of those as well, because we've had oil prices fall. That adds pressure. And we've also starting to get the Bank of Canada's governor starting to really emphasise his nervousness about the Canadian economy. So when he's starting to say that, and he's using the words like recession, well then the currency pair is going to take a hit, and the US versus the CAD will actually rally, which is what I expect to see. So keep an eye on that. We've had some pretty weak data coming out of the Canadian economy, and the most recent was the export data, and that was quite weak. So I also think that this employment change could actually surprise to the downside. So keep an eye on that, because the job situation has been deteriorating rapidly, and that could actually show up in tonight's news. And if that's the case, we could get quite a bit of a reaction from the market. Well, that's it in terms of fundamentals for you. Let's have a quick look here at the dollar index. As you can see, we did have a big rally. Historically, I did have a downtrend here that we spoke about in terms of a flat bottom triangle, and we've broken through it, broken to the upside, and we've taken out the recent low. So now the target is really the even 100 level, and coming up to test that. It's going to be interesting to see what happens when the market does hit it, but it's something definitely to keep an eye on. So I'm a US dollar bull. Let's have a look at the New Zealand versus the US. Now I've got the 4-hourly chart up, quickly showing you that it's moving into a triangle pattern, and I'm looking for a breakout of that and of some magnitude, and I think for now the US dollar will ultimately be the driver of that, and I'm looking for trading opportunities there. The Australian dollar versus the US, now you can see here that last night we had an indecision. If I go to the 4-hourly chart where I've charted it up for you, you'll see that we do have a rising wedge, and if I move to a 1-hourly chart, on the time frame there, you'll see that this is the most recent high, and we've made a lower one, and there's a potential for a downside breakout. Now, if we do get a breakout here of this low, well, then I'll be looking to trade this to the downside, especially if we start to get quite momentum in the US dollar rally, and gold starts losing momentum, and other commodities. Australia's been boosted by this move here, otherwise it was looking to break out. This move here was when they left rates on hold and surprised the market, and now we've just slowly grinded higher but into a tightening wedge. So at some point that's got to give, and I think ultimately the US dollar will win that battle. The euros fell quite heavily, and I've explained the fundamental reasons for this. Now, technically, this was a major support level, and I think that we could come up, test the 107, reject that level, and then we could be looking for a 106 test. So keep an eye on that. This is a 4-hourly chart here, so I'm looking for resistance levels in here for me to add to my shorting positions. I'm out of all positions now. I took some profit last night, and I'll be looking to re-enter in this area here. Let's have a look at the Great British Pound. If I zoom in here on the 4-hourly chart, you can see massive moves there as the market unwinds, and we're now testing $1.47. A clean break of $1.47 is definitely possible with US dollar strength, and there might be some trading opportunities there. Since the moves are so big, and if we do have a night where profit taking comes into play, being a Friday for the US dollar, we could just get a slight bounce, but then next week I expect the trend to continue. The US versus the CAD's the interesting one because of that news I mentioned, and we did get a bounce here off the ever strong $1.24 level, which has bounced off many times. So I think that's going to hold up, and we're going to see an extension now and potentially move up into the $1.27 region. It's all going to come down to the employment news tonight, and should we get a weak Canadian employment report, we could see quite a big market reaction here. The US versus the Japanese yen, we've started to actually get momentum and grind higher. That's as bond prices start to buy into the US dollar rally and also to the raising of interest rates. We've now taken out this resistance level, and I expect it to offer some support before we move up and test $1.21. Keep an eye on that for tonight. All right, that's it for me. Happy Friday, everybody. Trade well out there, and I'll be back again next week. So until then, be safe and trade well.